I'm John Schwinghammer. Welcome to a Purple Chips web update. I'm the author of Purple Chips, published by John Wiley & Sons and available everywhere. Before we start, I'd like to look at our disclaimer. Please take a moment to read this. Okay, in our webinar today, I would like to discuss some of the stocks that we talked about that are at low valuations. For example, Teva, symbol TEVA. I'll bring this up in a second here, just a moment. There you go. This is the current chart of Teva with the earnings line. The white line that you see is the earnings per share, the trailing 12 months earnings per share going back for 20 years. And you can see with the current positioning with the stock at just under $41, we still think this is good value. Now I'll move this earnings per share line. You can see this on the screen here. And this is what the reasonable target should be, somewhere in the 55 neighborhood. So we expect Teva to eventually get up there, and Teva is one of the top 10 stocks that we have. Moving on to some other stocks that are in the mid zone, we had talked about Oracle Corp, ORCL. We were buying this below 28.10, and you can see the chart right here. And I'll just move the earnings line to show you where we were actually purchasing it. We had bought Oracle in this area right here. I'll actually use the drawing tool here. You'll see we had bought it in there. And Oracle did go up to 32 and came back down to 26 after that. Now it's back to 32. And it looks like, based on our expectations, we should see Oracle get somewhere around $36, $37 in the high end of the range. So we expect a high valuation there. In the case of Stryker, which we recently bought just under 51, we're now trading at $53. And so we've moved up a little bit, and what we're expecting for Stryker is that we'll get somewhere around the 65, 66 zone. Recently we bought LabCorp, we said 5, and it's currently trading at 88.50. And given the shape of the earnings curve, we expect this to go somewhere in the 104 zone. Lastly, I want to talk about Aflac. The earnings came out on Aflac. They were good as expected. We were buying Aflac under 42, which was around here. Okay, and currently Aflac is trading at 45.56, so we're making a little bit of money there, and we would expect Aflac to get somewhere in the mid to high 50s. A couple of stocks that are on the high valuation end of things that I'll just point out are Google. Right now, well, when we were talking about Google, we said Google was was at a low valuation in the somewhere between 550 and 580, and that was correct because now we're trading at 660, and we would expect Google to be overvalued somewhere when it gets close to 680 plus. That would be the high end of the range. We talked about Pepsi. We had bought Pepsi a few months ago, and we were taking profits on it. This is what the chart looks like. And the earnings per share have been coming down lately. You can see that, let's see, you can see this downward pattern, which is what I don't like. And so to me, that means that you're going to see earnings continuing down and possibly Pepsi coming off, maybe going back down to the low end of the range. So you might see Pepsi go down to, let's say, in the low 60s. So I would be taking the profits on Pepsi here. Now, that's all for today. Just a quick update. I'm John Schwinghammer, the author of Purple Chips, and thank you for watching.